Our Melbourne studio. Chris, thanks for your time this morning. Just a thought on the banks. Good start to the session for them. An opportunity for investors at these levels, do you think?
Good morning, gents. Look, I'm not so certain. I do agree with Michael's point that the Royal Commission is in its infancy, and in the early days we did hear some shocking revelations about what the banks had been up to. And so that sentiment was very, very negative. But we remember that the Royal Commission lasts for the best part of a year, and that shock value will ultimately wear off. And as Michael said, they are trading to the bottom side of the range. I just still think there's probably a little bit more downside to go because we haven't moved completely away from that shock value of what's coming out of the Royal Commission. And we also know that the banks are trading ex-growth. That's a difficult environment for them at the moment. So, yeah, I'd like to pick them up a little bit cheaper, but certainly for me as well, they're getting to the point where they are looking enticing.
And I mean, do you have a preference amongst the four, Chris, or do you just go with the cheapest?
No, my preference for a while now has been ANZ. It's largely to do with their divestments. They have been selling off a lot of underperforming divisions. I think the most recent one was the life insurance division. And I think they've still got a little bit more work to go in terms of just riding their offering. So that would be my preference, ANZ.
Mike, a preference at all?
ANZ, for its advantage in the restructure that all big four banks need to do, it's well down that path. Others have yet to really get started. CBA for its technological advantages. That'd be my two in the sector.
I just want to flag a couple of early movers. 5 minutes into the session, it's interesting to see those stocks with a bit of a bent towards the US who have probably underperformed, outperforming at the moment. Macquarie up 1.6%, Boral up around about 2% at the moment, Aristocrat up around about 1.5% at the moment. I suppose not a huge surprise considering, the change in sentiment, Mike, that we saw in the US through this morning.
Absolutely, and those US exposures in particular are likely to be beneficiaries of the better outlook that was expressed by investors overnight.
Do you like exposure to the US, earnings exposure to the US?
I like diversification, James, and yes, the US economy is one that's accelerating at the moment, so yes, very comfortable with US exposures. The potential for a strengthening US dollar is what I've been waiting for some time now. That hasn't really delivered, James, but I think it's another reason for local investors to be looking at US exposures.
What have you made of the ongoing weakness in the greenback? And we flagged the Dixie before holding below 90 still. It's just been stubbornly low.
Well, this is the flip side of the very strong communications we've had from central banks generally and the US Fed in particular. They flagged this rising interest rate environment so well and so far ahead of time that a lot of the positioning in the currency moved ahead of the interest rates. And so despite the fact we're now more certain about rising rates, it's not having that strong impact of the dollar because it was so well flagged. The other argument I hear is that the widening US deficit coming from the spending and the tax cuts that have been delivered by the White House widening the deficit and therefore weighing on the dollar. I'd actually argue that that deficit needs to be funded and that should increase demand for dollars, not decrease it, but I'm not winning that one in the market at the moment.
So what's going to be the catalyst? I mean, what's going to suddenly turn around the sentiment as far as the US dollar is concerned?
One potential catalyst could be yen weakness. It's been very strong as the domestic political situation has worked through what is potentially a land-related scandal. And the architects of the easier monetary policy, the accommodative monetary policy, are potentially implicated in this scandal. So the concern here is that if that architect is removed from the finance ministry, we could see the yen's policy change significantly, and that strengthening yen has really weighed on the US dollar. If that reverses, if there's certainty around Japanese politics, we could see dollar strength very quickly.
Just on central banks, just the Fed, do you think the market has fully worked through, if you like, the absence or the pushing out in the price of the Fed put, the idea that they're there to, catch markets should they fall? Obviously, that's something that Jay Powell has spoken about, and it doesn't seem his concern around market fluctuations or sell-off is as great as it has been under previous chairs.
I think the market has discounted the Fed put to some extent because we are so close to the strike. The reality is that the ability of the Fed to act in the current scenario is a lot lower given where interest rates are sitting and given the enormous amount of US dollars currently in the monetary system. So there's less reliance on that because there's concerns about how effective it would be.
Chris, talking about the US, but in particular exposures to the US, is it something that you, for clients and so forth, like to have?
Not necessarily. Again, just pivoting back to what Michael said, I do like diversification for companies that I'm looking at, but I come from more of a trading perspective. So there's certainly other things in the analytical pie that I'm looking for rather than whether or not they've got exposure to the US.
Such as?
a nice trend, quality management, earnings growth, revenue growth, all those sorts of things. And, if the US dollar movement can provide a nice tailwind, I would say that's more of a marginal factor that I would consider.
And are you finding many opportunities that combine all of those trends that you like as far as trading is concerned?
Yeah, certainly. So look, I'm going to give you a taste of what we hold at the moment. A2 Milk, look, that's a fantastic growth story that goes from strength to strength. I can't see any reason why you wouldn't own it. BHP, we've been buying sub 30. Still like the commodity story. What else do we hold at the moment? Domino's Pizza, we have that as a short. So that's just going the other way. We think they don't make the run rate that they're required to meet in the second half of this financial year to get to their profit target that they want. So there's an idea of sort of the things that we look at and how we arrive at the recommendations that we do.
Mike, you're known to have the odd dabble as far as trading, or probably a little bit more than that. I mean, your thoughts around some of those plays and what you look for when it comes to trading options?
Certainly in trading, I'd agree. We're looking for short-term opportunities, short-term movement. That's a very different game to investing. I do both. Yeah. Domino's is one that's on both of my screens at the moment, and this one didn't work for me as an investment. I got stopped out when it dropped below $40, but I still like it. It doesn't fit my rules at the moment. But I do think it's a crucial half year for Domino's. They either deliver on these numbers and get that earnings growth in the 17 to 20% range, or they get sold down very badly. So,
and you hold out hope, or at least there is a glimmer of confidence that they can, in fact, have what would be a bumper.
Absolutely.
Second half.
Absolutely. I think a lot of the slowing growth is just a function of the mathematics. As you grow and as you grow your earnings, it's harder to make the same percentage increase because you're starting from a much larger base. So I think a lot of the pullback is actually related to mathematics rather than concerns about their business. So I do expect they'll deliver. But as I say, under my rules, I'm on the sidelines until we get that result.
Chris, I mean, what gives you confidence that they're not going to be able to deliver? And I'm well aware of the pun that we keep throwing around here as far as delivering is concerned.
So it's really, nice one, James. It's really about their first half run rate. I think their sales growth was around about 4%. So they need to pedal very, very, very hard in the second half. And I think it's something like 13% they need to grow their Australian and New Zealand sales. Now, I wouldn't have thought pizza's a particularly seasonal business. I think you buy just as much in summer as you do in winter. So I don't see quite how they make up that numbers. It's not to say that they won't improve, but it's just such a great distance between what they did in the first half and what they need to do in the second half to meet their stated profit target. And we all know with these growth stocks, when you start missing numbers, the market will absolutely hammer you.
They've been hammered already. I just wonder, and no one, it seems, other than, a band of few such as Michael. That's right. Expect them, to be able to hit that full year guidance. So I'm just wondering how much potential further falls in Domino's share price, Chris, you think, could eventuate should they in fact miss the target?
Well, what are we now? It's about a $40 stock, $41, I think, at last check. Who knows? 30. 30's not out of the question. It's not uncommon to see, as I said, these growth stocks, and we've all seen them, have bad numbers, and it's a 20-25% hit on the day. Retail Food Group is the one that springs to mind most recently, down 25%, and now it's probably down 60% from the first sign of trouble there. So when they fall, they can fall hard. And yes, I take your point, James. It's already gone from sort of 55 into 40s, but it's still a $40 stock.
Growth stocks and market darlings are always out until they're not. A2 Milk certainly captures the imagination of many at the moment. It's up strongly again today, 3.3%. Michael McCarthy, which side of the fence do you fall on? I mean, does the momentum keep going? Look, I think you're wrong. I mean, the reporting season numbers, one of the, alongside CSL for mine, probably the best reports that we got out.
Yeah, I'd rank it right up there as well, James. It was an excellent report. And what I really like about it is management are not sitting on their laurels. They've actively sought out new arrangements, new alliances to help grow those numbers again. The share price became unstable in response to that. It was already trading at a record high of $9.82 and it shot up to $13.78. And it's an extraordinary day of trading. So we had to wait for it to stabilise, but it did stabilise around that $12 mark, and it looks to me like it's on the march upward again. I would like a dip to buy into this one. I don't think we're going to get it.
Well, I was about to ask, I mean, would you be happy to buy into this as a trader and an investor, or?
Oh, certainly as a trade with aggressive risk management, I've certainly been playing from the long side.
And Chris, happy to keep adding from a trading perspective?
Yeah, most definitely. The biggest blunder that I suffered with this one, guys, was that I bought it about 8s and it hit a target for me just before the recent results. And I thought maybe I won't hold it into a risk event because ultimately I don't know what's going to happen. So I missed that huge move. And who knows, maybe I'm chasing my tail again here, but as I said, I really like the growth story. It's an exceptional management team that has already proven capable of expanding and growing the brand. And let's face it, as analysts, traders, investors, whatever we want to call ourselves, all we're trying to do here is make predictions about the future. And I'm willing to bet on that management team that's already got some runs on the board and some pretty strong runs on the board. So I'm just happy to go with that momentum for the time being.
Yeah, and the momentum certainly on your side. As mentioned, stocks up over 3%, $12.83. Chris Conway, great to talk. Thanks for joining us this morning. Have a good session.
Thanks, guys. Have a great week.